Hello, Jim Adams here. Today I want to talk about the risks of actually selling put options. And one question I want to ask you, and I think the answer will surprise you, do you think selling put options is riskier than buying stocks? So, that being said, let's go ahead and get started. Thanks for joining me. Welcome to the Easy Investing Income YouTube channel. I also have an associated blog that goes along with it with the same name, Easy Investing Income. I wanted to share with you who I am and why I have decided to do this channel. I've been a long term investor in primarily buy and hold strategy or income dividend strategy. So I've been investing probably since I first got out of college. And about 10 years ago, I started selling options, primarily covered call options. And I found that it was an easy way to add extra income. About, I guess, a year and a half ago, I actually had quite a bit of option contracts get called away. So I decided to dig deeper, and so I've decided to kind of go on a journey and learn how to do it the right way. So what I'm sharing with you in these YouTube videos is what I've done to kind of do it the right way. So I want to share my progress with others, and I also want to share it with my son. My son will be leaving in a little less than a year to join the Marines, and I want to share with him, how I invest and what I do and don't do. So that being said, let's move into the main emphasis of this YouTube video is the risk of selling put options. And of course, the question that I started out with, is it riskier to sell put options than to actually buy stocks? So let me go ahead and get started by first defining what a put option is, at least selling a put option. So when you sell a put option, the easiest way to think of it, and let's use an example like Intel that's, let's say it's selling close to $60 currently, and I want to buy it in the next 30 to 60 days at say 55. Well, I can sell a put option where I can set a strike price of 55, and I can set the expiration day, say, of 30 days, and someone will actually pay me a premium for that contract. And at the expiration of that contract, if it's close to that 55, there's a good chance I'll be assigned, meaning the stocks will be, I will actually purchase them. The person who I sold the contract to will initiate an assignment, and my account would actually take ownership, and I would have to pay him the cash for those 100 shares. So that's kind of keeping it simple. But what's nice is a lot of times, or for me, I've probably have sold maybe 50, 60, maybe as many as 70 put options, and I've only had one actually be assigned. All the others have either expired or I closed them. So the real risk is for a put option is the assignment, the actually where someone assigns you those shares and you have to pay for them. And if you think about that as a risk, well, if you want to buy the stock to begin with, it's not really a risk. It's something you want to own. And especially if you do the kind of investing that I do, meaning I only sell put options where I have enough cash to purchase the stocks. I do not do what's called naked puts, where you don't have the cash and you may have to do it on margin. I typically only sell options where I've actually got the cash to cover them, at least put options. In a similar fashion, I also sell covered calls, and I always own those stocks. I don't do naked calls. So I suggest you stay away from doing naked puts and calls because it's a lot more risky. And so the primary risk is assignment. It also can be that you can take a big loss. So to give you a for instance, with Intel, if Intel again is trading currently around 60, if bad news comes out related to earnings and it drops, say, into the 40s, well, you may not want to own Intel at that price. You may decide, well, I'd rather close it for a loss than actually purchase the shares at the price I have, sold the contract for. So that's also a risk, and I've been able to sell them for small amounts. So again, the risk with that is relatively small. And if you're selling option contracts on, I prefer to do it with companies that aren't real expensive, and that's why I'm mentioning Intel. Intel's like 55 or 60 currently. I also sell a lot of contracts on ExxonMobil, Coca-Cola, stocks that are in the 50, 60, usually under the $100 range. Now, I did sell some on Apple. I think they were around 120, 125, and they expired worthless, mainly because Apple now has gone up above 145. So if you limit your downside risk and you buy good companies or look at buying good companies, you also minimize your risk. And again, you can always manage the risk by, again, if you're okay with owning the stock, you can let the assignment occur. You can close it. You can also roll it out to a future date and a later expiration. And in a lot of cases, when I've done that, I've earned actually more premium. So, as you can see, there's not a huge number of risks related to selling these. And again, I've sold probably again 60 or 70 of these contracts, and I've only had one expire, and that was DVY, which is an ETF that specializes in these kind of stocks I like to own, which are high dividend paying stocks that continually increase them every year. And the main reason that was assigned is that was before I really knew what I was doing, and I let it actually go through expiration, and it was assigned. So the risk in my mind, or my personal feeling, and you may disagree. If you do, please add a comment below. My personal thought is that actually selling put options is a lot less risky than buying stock, mainly because if you've bought the stock and the market goes down, you run the risk of having a much bigger loss than what the loss would be with selling the put option. And in most cases, if you roll the put option, which I've done a number of times, you can avoid actually having the stocks assigned to you. Whereas when you buy it, you're already in. There's no way to get out unless you sell for a loss at that point. So personally, I feel like selling put options is a safer strategy than buying stocks. Now, I do both. I typically look for market corrections. So if there's a market correction, I will go ahead and buy stocks, especially if I want to round things up to 100 basis of shares. Don't know if that's the best way to say it, but contracts are 100 shares. So if you sell a contract, it relates to 100 shares. So if you have positions that say and I have a couple that I need to buy more. So if you have 80 shares and you need 20 more, well, I will buy 20 more in those instances, especially if the stock's not way overpriced. So that being said, I'm glad you joined me. I'm going to share another part of this video right after this where I'm going to actually talk about a couple of my positions. So if you want to stay tuned, hold on for that next section. If you want to, move on and look at other videos or, continue with your day. Thanks for signing in or tuning in. And please, as always, subscribe and click the like button if you like this video. And I'm going to try to release one video each week and talk about similar things and how you can really add selling options as an important part of your investment strategy. For me, I've actually been able to earn between $2,000 and $3,000 every month just selling options, and it's given me the ability to reach financial independence a lot sooner. So thank you again for tuning in, and have a great day. Thanks for staying tuned in. In this part of the video, I just want to share with you some of my positions and what I'm going to do with them. Just to kind of give you for instance of what it would look like in your account if you so choose to begin selling options. I encourage you to give it a try. You can really make some great additional income. So I'll go through my different equities here, and this is just one of my accounts. But the first one you can see is I've got Prudential, and it's one of my favorites. It is one of the more expensive ones that I do invest in, but it does pay a really high dividend. And you can see here it's gone back up, and I've got it expiring a little farther out than usual. I guess that's 2 months. And the higher end, this is what's called a vertical credit spread for a put, and so 87.50 is the actual um, short. So it's the inner arm, and it's the one I got a little bit more premium, and this is the farther out arm. So the margin that's required is $10, the difference between 87.50 and 77.50. So the required amount of margin is only a thousand. What is it? $1,000? Yeah, 10 times 100. Yeah, so it's $1,000. So this one you can see that I don't really need to do anything with it. It's gone up. It's pretty far away from 87.50, and I do have some profit in it already. But it's not worth closing at this point, because to close it I would spend quite a bit of money. So I'm going to leave it as is for now. I also have um, put options on Realty Income, and it's expiring also on 9/17. So I found some good premium on 9/17, expiring on 9/17. And just like Prudential, for Realty Income, I really don't need to do anything at this point. It's at 59, or 69, excuse me, and the put is at 60, so it's pretty far outside the money. If I was to close it, I could probably close it for $20 or $30. So actually, it's two contracts, so there would be a little bit more money. If it was a lot closer, or or the price of Realty Income had gone up to like 75 or 80, then the values might lend me to actually closing those positions. But currently, right now, it doesn't make any sense, and it still has a lot of time value, or yeah, it's got time value left. So the closer it gets to expiration, the more the contracts will actually become less and less because of time value. So not going to do anything there. Kellogg's, again, another 9/17, and it's at 60 and 55 now. It's getting a little closer. It's at 63. Um, Also, another point I want to make is usually nothing occurs with these puts until you're really close to expiration. So again, just like the others, it doesn't make sense to really do anything with these. So this one has a little less risk, since the inner arm is at 60 and the outer arm's at 55. So that was 500 per share, so $5 difference times 100, and actually times two, so it's 1,000. So this Prudential, all of these, you got to multiply it by two, so it's a little bit more margin. So again, nothing to do now. I will show you that I do have Microsoft has gone through the roof, so I'll talk about that in another video. But currently, I've got, I guess, 2 more weeks. I will definitely have to roll Microsoft uh, currently. And this is the one exception. I typically don't I say don't do naked. This is the reason you don't do naked, because I do have enough cash to cover it. In this instance, I would probably try to close it or roll it significantly out, but Microsoft has really gone through the roof recently. So I'm not going to do anything about that currently, but it's something I need to look at over the probably next week. I need to make a decision on what I'm going to do with it. So it's something I need to be aware of. Intel. So you can see why I've been talking a lot about Intel. I've got actually three, and here I have 325. So I really need to buy 75 more shares to make it 400, so I can do 4 calls. And you can see it's at 55 and the calls at 64. So I've got quite a bit of profit in that. But right now it's so far away from 64. I'm not going to do anything. I will look probably a day or two before 7/23, so like on the 21st of July, and look at actually maybe closing those contracts or rolling them out. And I also will. I've already looked at it, and I think the next dividend X date is pretty far in the future. So I don't really need to worry about dividend X date. But that's something else you need to keep in mind. For some of the calls, I did have a couple of, especially Coca-Cola, get called rela- close to the ex dividend date. A lot of people will go ahead and have those assigned or the shares assigned because they want to get that dividend. So it's something to keep aware of. So I'm not going to do anything with the Intel call. I do have a few different puts on it. So I've got one is a cash secured put. So this A20 is cash secured. So I have enough cash in my account. Um, So right now it's at 50, so it would have to go down. So it's something, it's not till 820, so I don't really need to worry about that till I get a little bit closer. But again, the ex dividend date, it may be pretty close to 820, so I need to verify that ex dividend date. For this one, it's 50, what is that, 53.50, so it's fairly close, and that one's expiring a week from tomorrow, so it's something I need to probably look at to see if I should roll this. Right now, it's if I was to close it, I would still probably spend close to $140. So I'm going to wait a little closer to expiration, probably again on the 21st of July, and look at how I'm going to handle that. But right now, I'm probably going to roll it forward, look at getting more premium. So I'll look to for expirations in August and September, and I will also look to gain premium and to get a little bit lower strike price. So, but in in relation to calls, since you're going down, it can only go down 50, $53, but typically these stocks will never go down that much. Now, if there's a major market correction, it can hit in the 30s. So something to be aware of, but um, not a whole lot of risk that that's going to happen. I do think we will have a correction, but my guess is it's going to be more like 5 or 10%. So, and then I also have Cisco here. It's expiring on 6/8/20, so I have a little bit of time for that, and I don't really need to do anything for it. The put is 70 at 72, so it is fairly close to the short or the inner arm. So this is something I need to keep an eye on as it gets closer to August. I'm not going to talk about Nvidia currently, but I'm way I have a covered call on it. I do own the shares, so it does seem really risky, and it looks like I'm going to take a huge loss on it. But in actuality, I purchased that at 140. So if I roll it, or depending on what I do, um, I can continue to make money. So I don't really look at that as a loss. Some people may disagree with me, but I've got a little bit of time since it's September 17th, and Nvidia's gone through the roof. Actually, I think it was close to 120, or not 120, 820, and it's come down, and I think it's going to continue to come down. It's getting ready to split in the next week. I think it's a 4-for-1 split, so that'll also give me more things I can do related to it. So instead of having one option, I should have four. I believe that's how it works. And then for ETFs, I do have some DVY. Again, 917, 107. So you can see it's pretty far away from the value, and nothing I need to do currently. And then I do have some ARKK, and the nearest one is 820, and it's gone down quite a bit recently. I think it got to as high as 129, so 107. I'm still fairly safe. So you can see from looking at my account that I don't really need to do anything today, and but next week I'm going to have some work, and I'm probably going to roll a couple of contracts and look at um, making some premium and rolling those. One thing you can see here, I've got 62,000 in cash. That's another thing you find when you start selling these options, you're going to gain a lot more cash. So that's the highest amount of cash that I've had for a while, and it lends nicely to if there is a major market correction, I can potentially get some stocks at a good value because I've got that cash sitting there, and that's also my emergency fund. And so, but it's on the high end of my emergency fund. I don't need that much. That's over for me. That's over a year, probably 15, 16 months of being able to cover expenses. So that's a quick review of one of my accounts. I do have another one, but it does not have as many trades. This account has most of my trades in it, at least the selling of calls, and it gives you an idea of what it looks like on Schwab too. And like I said, over the last since I've been doing this for 10 months, I've been able to rack up a fair amount of cash. I think I started with 35,000 in cash and have been able to increase the amount of cash in the account and take a little bit less risk. So I hope you enjoyed this last part of this video. And again, always, as I always say, please subscribe, please click the like button. And again, I will be releasing videos once a week. And if you want to take a look at my blog post, it'll be listed below, or not, not my blog post, but my blog, as well as my Patreon. If you want to get involved and want some hand holding, please join my Patreon group, and I will be able to share with you and help you actually make some of these trades. So thanks for tuning in, and have a great day. Bye bye.